Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, June 24th, 2009. Well, we're seeing a nice little positive day on Wall Street across the board, although we are off the highs as of now. The S&P up 12 points, the Dow up 55, and the Nasdaq up about 38 on the day. Very, very strong move on the Nasdaq today as a result of Oracle's earnings. Oracle reporting earnings that beat analyst estimates yesterday on revenues and the top line there on earnings. And the stock is up big on the day, $1.75 to the upside. Take a look at this, where it closed yesterday and where it is trading today. Just a monster move on ORCL, Oracle. Now, that's very, very good for the tech sector, but on the other side of the charts and on the other side of the sectors in the market, you really have to focus on a couple different things. Number one, what is ExxonMobil doing? Because that'll give you an idea of oil. Where's oil doing? What is oil doing today? ExxonMobil basically flat on the day, up just 11 cents with a slight little bit of a positive move here. And one thing I'm seeing on this Exxon chart, folks, a little bit of a trend line developing here, and you can see right here how you're coming right into support on Exxon based off of the lows connected to the lows here and the lows right here. So watch that line on Exxon this afternoon. That could be a key line for a possible breakdown. And again, I'm just here to put things in front of you. You guys can make your own decisions based on what you feel. But again, we're just giving the guidance, giving the technical analysis here, and that is something key on Exxon to follow. Now, let's go back to the SPY and talk a little bit about what's going on today. The levels here are all my key levels on the charts. You can see how we gapped above the 90 level today, 89.90 to 90 level on the SPY, which coordinates with the highs over here going back a few days. And you can see as soon as we gapped above and we didn't sell off and close back below, this market was in bull mode. All right, and all of a sudden you see monster moves up here, green candle after green candle as we go all the way up, and look at where we come up to. So our master level right here coordinated with a gap window at 91.20, and look at this, the 200 moving average also right here as well, right around 91.10. Sure enough, what happens? The spiders go right up to that level, touch it, and then start to pull back, and that's a great shorting opportunity there. You have major resistance here as a master level gap window, also the 200 moving average, and the market decides to pull all the way back here to the 20 moving average. Now, what you're doing right here is basically trading sideways. Now, the one caveat here is that we do have a bond auction, the 5-year going off now. It should be done. We should get the reports on the 5-year right now. You may see a little flush in volume here as it comes out. We'll see how it performs live as we do this video and we talk about it. So far, no reaction on the spiders, but as of 1 o'clock, which it is now on the button, we should be getting those results to come out. So we'll continue to watch for any reaction on that. But the big thing of the day, folks, is the Federal Reserve at 2:15 p.m. Eastern Time. Again, that will be the number one thing for the day that will be talked about after today. This morning we had good durable goods orders. We had not so great new home sales. But long story short, it's all about the Federal Reserve. What does their policy statement say? What are we going to do here? Oil again pulling back a little bit on the day, down 71 cents. Oil was higher on the day. Take a look at the USO. USO gapped lower and then rallied to go positive and then touches the 200 moving average. And look at these 200s. Is there a better shorting opportunity than the hit of these 200s on the two charts we've looked at? We've looked at oil here now, and we just showed the SPY. And look at the reversal off that. Nice topping tail. That's a beautiful topping tail on the USO. Little sideways consolidation and then a monster drop here on oil. Beautiful sell-off there on oil. Let's go back to the spiders. I just showed you the touch here on the 200 moving average, and look at the sell-off that ensued after that, right down to the 20. That would be where you would look for support, being obviously at the 20. You're now consolidating sideways. In my opinion, you're on hold now until the Federal Reserve gives their policy statement. Now, remember, the policy statement, it's not about what they're going to do with interest rates. Their interest rates are not going up today. You're not going to see them raise interest rates. You're not going to see them lower interest rates because they're basically at zero anyways. What you're really looking for in the statement is what's their indication on the future of interest rates, on the dollar, on rates, on buying treasuries, and this kind of thing, because this is going to affect the dollar and rates, and that's really what the key underlying factors in the markets are right now. All right, we want to see whether or not the market is going to react. Is the dollar going to drop? Is it going to rally? If the dollar drops, commodities will rally, and you'll see the market go up. If the dollar rallies, the commodities will go lower, and you'll probably see the market come in a little bit. Nonetheless, a very, very solid day on the upside with the Dow up 55 points, S&P up 11, and NASDAQ still up about 38 points on the day. You can see the market upticking just a little bit after that bond auction. You're getting a little bit of a move up here, but you do have resistance right here at the 20 moving average at about 90.75, minor resistance right there. Now let's talk some key levels, folks. What are we looking for on this SPY chart for the rest of the day? Number one, you really have to be in sideways action or pause mode in your personal. At least for me, I'm in pause mode. I'm not looking to take any positions ahead of the Fed. It's just not the smart thing to do, okay? Not the smart thing at all. Okay, the auction numbers coming out here, bid to cover ratio 2.58 compares to recent average of 2.16. All right, so that's not too bad. You're seeing a little bit of a tick up here on the spiders, but nothing major yet. And again, I don't really anticipate anything major, only because every eye will be on the Federal Reserve now. But nonetheless, you do see 5-year notes, the yields trading lower by a little bit, just micro cents here on the way down as they came in a little better than expected. You can see a minor little uptick in the spiders right here, and the market's getting a little bit of a boost here on that number. And a little more buying coming in now. We'll see if we can recapture this 20 moving average. That gets recaptured, you look for the 200 moving average as the next spot, and if that passes, then right up here into this key level at around 91.15 or so, which will also basically master right into the highs of the day here as well. So 200 moving average, key level, and double top, all in a tight range now from about 91 to 91.15, 15-cent range right here of major resistance. Now, right now, again, you're forcing right into the 20 moving average, and you want to see whether or not that will break and close above. If it doesn't close above, could actually be telling us we'll have a little bit of a sideways move into the Fed, maybe a little bit of a down move. But then all of a sudden, guys, the Federal Reserve will be the big thing. You'll see a flush of volume come in. There's no volume in this market yet. Absolutely no volume all day long. This market is all about the Federal Reserve right now. You should see a good uptick in volume. The Dow's got a little boost here. Oil's getting a little boost as well on a bounce. You can show you the USO chart again. Take a look at that. Little boost in the USO. There's our topping tail right into the 200 moving average. You got to know that type of pattern. Also know this pattern right here. 1-2 bar after a big drop, telling you there's going to be more downside. All right. But again, going back to the spiders, market's getting a little bit of an up move here on those numbers. Now, last but not least, let's talk a little Goldman action. Goldman showing some signs of life, but what you have to realize, folks, is, and we called this out in the chat room, this topping tail on Goldman right here, but also look at what it matches up to, and I'm going to show you right now how accurate and understanding you have to be on the charts. Charts are everything. See this high going back to the, let's see, this high would be the 18th, the 19th high last Friday, right into the close. Take that line, put it right in there, and then take that line and just stretch it right across. Oh, look at that. Double top, dead sell signal. Look at the fall on Goldman there to the 20 moving average. 20 moving average, you cover, you're short, it trades sideways, and now you're seeing a nice pop on Goldman as the market's catching a nice little bid here on that auction. It seems the results were definitely better than expected. Again, I don't think there's going to be a major move only because of the fact you have the Federal Reserve out there lurking. But nonetheless, you've seen oil get a bid, you've seen Goldman get a bid. All those are going to add up to a slightly higher move on the markets, which is exactly what we're seeing. Now, what do we want to see on the spiders in the afternoon session, guys? If we get a bearish pattern here and we start to fall, your major support line will be right here at around 90 to 89.90. That'll be the big level. It's gap window support as well. You got high right here at 90, and then you got the 50 moving average, which by that point, I'm sure will be up in this range somewhere higher up. And we'll continue to watch for that as well. But nonetheless, that 50 will continue to slide higher. That 50 will actually be the number one support on the way down. If we fall, then it would be this 90 level, 89.90. Then gap fill right here at about, let's see, official gap fill would come in at around 89.50 to 89.30 or so. Then you have the purple trend line down here at 89.25, and then the lows from yesterday at 88.85. On the upside, again, as I mentioned, a close above the 20 could mean that we're going to go tag this 200 into the close today, or into the Fed meeting even. We could get up there. That gets through, then you have the double top and this major level right at this point. If you get through that, your next level will be 91.50. If you get through that, 91.95 to 92 on the spiders. Those are your master levels to watch for the rest of the intraday period. Just a reminder, folks, we launched that new page, Hot Charts and Alerts. Fantastic, as we put out charts on the daily, weekly, and monthly time frames on there that are coming into key levels that you need to watch that we're seeing. So it's more geared towards the longer term investor. It's all part of the Research Center. Everything under the Research Center is included for $49.99 a month. I don't think there's a better deal out there for all the information and all the hard work that goes into that service. All right, and of course the chat room is always fun. Come and join that. Enjoy the webinar, which will be in the weekend after July 4th. Will be the webinar as well. We're going to cover all the cycle activity, how to figure out cycles, how to understand different charts and trend lines. You can find all that information under seminars, education, webinars on the website link. All right, have a wonderful rest of the day, folks. Watch that Fed at 2:15 Eastern p.m. All right, talk to you soon.